All right, it looks like we're live. It looks like we are now recording. All right. Welcome everybody to another edition of the Traders Mind Chat Show, where we talk to professional traders from around the world to get into their mindsets, what they think, how they've come to believe what they believe, and how they've become so incredibly successful. Today, we have the trading legend, Jim Roppel. He has appeared in how legendary traders made millions, monster stocks, how Jesus Christ, I can't, like, I'm so excited to have this guy on. I'm getting the how to make money in stock success stories by Amy Smith, and has been a mentor to me personally from afar for many years. Not sure if Jim even knows that, but Jim, thank you so much for coming on the show, man. What a pleasure.
Hi, I'm so fired up to be here today. Like, of all days, this is the best day. I'm so happy.
Tell us, man. Like, so the question that's on everybody's mind and mine too, like, well, what do you think about all this? Well, what do you think of this down market? How are you handling it? Let's just dive right in.
You know, first of all, I want to say this. If you're a trend follower, there is zero reason for you to be stuck in this market. Like, we have the greatest roadmap given to us by Bill O'Neill and other trend followers. I mean, if you're stuck in this market right now, you kind of you didn't have your eye on the ball. I mean, there was a lot of signals, a lot of clues. And I personally was really, really, really bullish coming into this period. But I also started noticing the level of extension over the 50-day moving average was really historically extreme, or to levels where the market would pull back. So I started hedging a lot. I actually overhedged quite a bit in the weeks leading up to the top. And
Okay.
so actually,
and how did you do that?
I was short a lot of calls that were deep in the money, and I was outright long a lot of puts. I mean, that was before the VIX went to Mars and the premiums got too expensive. Mm-hmm. But so when the market rolled over, I didn't really care and feel it. I was actually so hedged, I was oblivious to the damage that we're now seeing. Like, I didn't get it. You are trading what your experience is. And my experience was, well, this is no big deal as it's blowing up because I was so hedged. And then I kind of got real cute. And when we had a really extreme bad down day, like, is today Thursday? Maybe on Monday or something this week, I was slowly leaking out all my hedges. And one morning on a horrible down open, I just blew them all out. And then all of a sudden, I was like feeling the market and the weight of it, which I couldn't comprehend before because I was trading what I was living. And so now, only after I took my hedges off did I start to really get the gravity. And my associate Eve was way ahead of the curve. She's like, this is going to be a disaster. And she took her whole fund. She took the fund she runs for me and put it all in cash. As to where I was pretty heavily long, I got off margin, but I was so hedged. Is that an answer for you? That's how I came into this thing.
Yeah, wow. Like, there's a lot to dig into right there too. Like, the first thing that I wanted to dig into is, well, when you took the positions off and your mindset switched, right? Like, can you tell us a little bit more about that? Because like, that's something that I feel too. I think that that's a lot of like that's a unique perspective that a lot of people feel, like, well, when you're in a position versus when you're out of the position, and you're able to just like, it's like seeing it from a fresh set of eyes.
Well, I saw historical measures of fear got really extreme. Mm-hmm. And I was one of the non-believers that I didn't think this was going to be an epic disaster. So when I saw those fear indicators, the put to call, the VIX, new lows, just the blowout 90% down days, I was like, well, we've got to be getting to a low. And so that's when I took off all those hedges. Now, consequently, after a couple, here's another thing. I was long Teledoc up the butt. I mean, I had a pretty big position in it. So even though the market was imploding, Teledoc's going up. So I couldn't feel the heat, which blinded me to the severe damage that was occurring. So I took off those hedges when I saw those extreme indicators. and I got too cute, and it drew me down. I think at one point I was up like, see, here's the thing, I'm having a good year, you know? I mean, I know I'm up about 30% right now, and I'm almost all in cash. I have about a 7 or 10, 15% long a few things. But so when I took those hedges off, I had to sell stock immediately because I was not going to take the heat.
Mm-hmm.
So, you know, I was using China as a roadmap. Okay.
Interesting.
I felt they were blindsided. They had no forewarning. Their healthcare system sucks. It's ranked 138 in the world out of about 190. It's like where Zimbabwe is. It's a third world country. America. Well, so I was just there in November, and I saw the mass of humanity, the population density there. It's hard to. If I can say to you, a street signal may change and the cars go by.
Right.
Several thousand cars might go past. The streets are 5 lanes wide each way. The mass of humanity is hard to comprehend. You go into a train station and you're like jammed into a tuna can, a sardine can. So they had this. China's one.
So I'm just trying to picture this in my head. So I'm from New York. So I'm picturing Midtown Manhattan at rush hour.
All day. It's the mass of humanity. The spread. China is maybe the most densely populated country in the world. America is one of the most sparsely populated. We have more land per person than almost any other country in the world. I mean, American exceptionalism is true. Let's not forget who we are. We are nothing like China. We had forewarning. We have the greatest healthcare system in the world per capita. We spend #1, more dollars than any other country per person. We have the greatest gene sequencing, greatest biotechnology industry. We have sucked the brightest and the best people out of every country in the world. I mean, immigration is really tragic for the countries that people leave and come here. We suck in the brightest and the best, and all these countries are left with the people who are lesser capable. We have them all here. Americans are super industrious, crazy resourceful. I mean, think about when the war occurred, the big war. We turned car factories into tank factories in a month. We retooled our whole industry to go into a wartime economy in the briefest period imaginable. We are an industrious, America's #1, buddy. It's a one-way street and they're all coming here. And we're going to handle this. We are going to get past all this. And the market is, I am rambling. I'll just tell you this. The opportunities that are setting up right now are historic. The people who fly coach are going to go to first class. The people who fly first class are going to private jets, not sometimes, all the time. The money that's going to be made out of this downturn, if you've preserved your mental capital and your war chest of cash, is going to be unbelievable. People are going to get seriously crazy rich off this.
So so then the next question that everybody's going to have, and it just popped into my head too. And by the way, when we, for everybody in the audience that's here, we build this as we're here to help you guys. So we want to get all of your questions in. So there's a little chat there, and we will go through the chat, answer every question that you guys put in there. So start putting your questions in now. Jim and I will go through it and start answering all that stuff. But just to bring it back, what would signal to you that, all right, we finally hit the low? What kinds of things would signal that to you? What are you looking for?
I mean, we're there. Every fear indicator I follow is just literally. Some of them are charting off the grid on my laptop, like the lines for the VIX and put the call. It's right off the screen. But one other thing, you cannot discount the Fed. Okay, the Fed is leaning into this. They are leaning into the wind. The level of fear we're seeing amongst longs right now, we go up. The fear in the shorts covering with the Fed leaning on it is going to both. Longs and shorts are going to have been destroyed, but the shorts are going to get murdered when we have these neck snapper rallies. We're going to see rallies like we've never seen before because the Fed has never leaned into the market like this ever. What am I looking for? I mean, the beauty of trend following is I don't have to know. I can just chill, and everyone should be in cash. or largely in cash and waiting for a follow-through day. You don't even have to there's no guessing.
All right. So you would be following like the same follow through model that Bill gave, where like, all right, you have the rally day, you wait 4 days, and then like if there's a follow through, that's when that's your signal.
And nobody is going to want to do it. Like some crazy stuff like Trump's going to shut down air travel in the US. I mean, it's going to be so ugly at the bottom. You're just not going to want to do anything. We're going to have a follow through day. It's going to be thunderous. And people they're not going to have their mental game because they've been brutalized and lost so much money. And it's going to be a fear factory.
So if I pull up a chart for a second, just to give everybody a visual over here. Let me see what screen. I only have 6 screens. I feel like an amateur.
I'm compensating for something. Did you see Shrek?
Yeah.
Do you think he's compensating for something?
Yeah, right. Oh my God, that's hilarious. But so what I have over here is a weekly chart of the Nasdaq, and did we just breach the June 2019 low, or yeah, like June 2019 low. What the hell was the low? Yeah, well, we breached those lows. Like, I mean, it seems like if you're just eyeballing it, the next stop is the lows from 2018.
You know,
maybe
it could. Listen, if the economy just grinds to a halt, which it might, there's no telling how low it can go. I remember the '87 crash really well. And the only real show back then was Moneyline on CNN. And they had this really renowned expert named Pierre Renfro. And the night of the crash on Monday, he comes out and says, this is a really well-respected person. And he says, I predict a global depression. He said that the Monday, the 19th. Well, we didn't have a depression. We didn't even have anything remotely close to it. But that's the kind of crazy talk you're going to hear at the bottom. I mean, they're already trotting out all these perma bears, like guys who've been really crazy bearish for 10 years. All of a sudden they're starting to tweet all the time. Like they're
like, yeah, I told you so back, like back here, like I knew that this was going to happen back in 2013.
Like they say, the clock's right twice every 24. These guys, their clock isn't right every 10 years. I mean, they're just being a pessimist it's such an ugly way to live. But it just ruins your market psychology. I mean, the market is going up 3/4 of the time. And the cost of human capital and monetary capital to learn how to short for a 20% probability, like the market's going up almost all the time or sideways to up. So why would you expend all that energy to learn how to short? Only a pessimist. You've got to be a real pessimist to be a great short seller because you can't hold through the rallies if you're an optimist. So where are we going to go? Are we going to go down to those lows?
Let me ask you this then, right? Like, so that seems like if I'm looking at this, like there's like, if I'm looking at this for support, like, all right, maybe that's support, but like, are you like saying that, oh, we're so far extended that you would start buying like out of the money calls now? Or are you waiting for that follow-through day to happen? Like, well, what's
I'll really
strategic point?
Adhere to the rules here. I will tell you this. My wife and my wife has some cash on the sidelines, and I had her buy some things this morning. But on Christmas Eve, 18, my wife's preparing for a whole ton of guests. And I looked at the market, and I had written down 4 variables a couple weeks earlier. I said, well, if these 4 variables are hit, I'm going to put some money to work. And with 15 minutes to close, I bought about 6 different stocks and I still hold all of them. But I felt kind of like we're seeing that right now. But for my funds, I would never do that. And I just put a little bit of money to work for the long haul.
Got it. Excuse me, like for a second, I forgot who I was talking to. Like, so like you're like managing like funds for other people, and then there's like what you would do privately. And like that, I think that's real important for people to know too, that like, yeah, like how you would manage other people's money is going to be different than how you manage your money, or how you manage like one account versus like. And so, for example, I have 3 accounts. I have a day trading account, an intermediate term account, and a longer term account. And like they each get managed in their own way.
Yeah, I don't want to misconstrue things here. See, here's the thing. When you're in a fund, you have a fiduciary responsibility. You can't trade against your own fund. You can't trade ahead. You can't front run. So I'm really precluded to very few times in the world when I can put personal money to work, unless I put it in my fund. So it's kind of like, I know Eve nor I is going to buy any stock for a minimum of 4 or 5 days, which will get me past my fiduciary responsibility not to front run. So I don't have many opportunities to put money to work. And that's why I'm doing, I'm not trying to buy a catching knife or catch a falling knife or anything like that. I'm just put a little bit of money to work in some super high consistent earnings growers that, my wife is the greatest long-term investor in the world. She's held Apple for like 10 years, and she buys a lot of stocks and just sits on them forever. Doesn't look at the volatility at all. Her risk management is turning the computer off. Literally.
That's great. I love it.
You from her. There's a club of women up in this little town called Lake Forest, and I've been addressing them for about 15 years. And it's called Birthdays and Balance Sheets, and they meet once a month. And they usually call me and say, hey, what are your best ideas? And I give them to them, and they usually buy them. And they don't meet for a month. That's it. They don't look. And they've compounded out at a wacko high number. I mean, crazy high. And they buy all kind of like canned slim stocks. They've missed almost every bear market because they call me once a month and say, what do you think? And I'm like, well, it got really dicey here, and they've missed every bear market. And I'm taking a cue from my wife and them. If you want to get seriously rich, you need to sit. Okay. And I know you do a lot of day trading and stuff, but I think it's hard to become a multimillionaire taking $5,000 and $10,000 profits, or even $500 profits. Like, you can't, if you're going to get rich, you need a triple, and you need to have a lot of money in it. You can't do that chipping away little tiny pieces all the time. I think there's people who trade to pay the bills. They make their $500 or $1,000 a day. But you don't see any people like that at 60 years old, because they've been blown out or they're mentally destroyed. I don't want to live on a razor's edge of always having to be stopped out and be right on the screen. I got to hit that thing and undercut the 3-minute bar. Like, I don't live like that. And I want to get rich. So I'm way off topic. I'm sure. Where were we, man?
I love hearing you talk, and you have like so many great perspectives on everything. Where it goes, where it goes. Let's see. I want to ask you about Tesla. Well, what did you do with Tesla? I know that there's a story here. Let me bring up the chart of Tesla and let's hear about it.
Okay. Eve Boik is probably the greatest researcher in the world. I'm very lucky to have her working for me. She bought one, and she is infatuated with it. She loves it. And she got in really early. Well, she's tried to make it work a few times, and she got stopped out, but she got in really good late last year. And then I started loading up on it. And this was a classic sign that we were going to get into trouble with the general market. We had the blow off in NVIDIA. We blew off in Square. We blew off in Teladoc. And this is the mother of short squeeze blow off tops. But as it was going up, I started selling some calls on it. Like, I was like, I'll sell the 700 call for $100. I'll take 800 for some of my stock right now. So I did start to sell some too early. But the day it absolutely totally blew off, I went pheasant hunting. And so I'm calling, I got a loaded gun with a line of guys, and I got a handheld, and I'm shooting birds. I mean, I was so in the zone. I was pegging those pheasants, man. I got the first 3. Tesla's raging. I call Eve. I'm like, where is it? She's like, it's up 170 points. And I go, I'm done selling for the day. I'm just going to keep the rest of it. Like it was like 20 minutes to close. So we finish hunting. I'm like, oh my God, it closed down radically. So I sold some a little early, but I ended up selling a lot of it, right? I actually sold some stock synthetically with options at 1,018. I think I sold the 900 strike calls for $118. And then I kept just a little bit. I took it over the top, but that was a major sign. It kind of reminded me of 2000, where you had Shopify, Nvidia, Intel, they all blew off, and we haven't had blow-offs like that in years. So it kind of was a signal to me. But again, I still stayed with things until the general market rolled over.
Wow. So when did you sell the last bits of this?
I took a couple thousand shares all the way down to, right there, wherever your hand, right there. I probably took
so right down to the 50-day.
Probably a little higher, but I definitely took some right off all the way. And I was intending really to just hold a couple thousand, maybe just kind of keep my eyes on it. I mean,
right.
It did blow off pretty early. Like it was a pretty clear blow off to me, but I was kind of confused on the timing, like the time frame, like how much time it blew off really quickly. So,
it's so interesting too, to get back to the mindset of it, how holding on to just a little piece, keeps you engaged so much differently than if you don't.
I think I was talking to Bill one time about 15 years ago in a hallway after one of his seminars. And he's like, "What's your position?" And I said, "I'm all out." And he kind of gave me the frown. He's like, "You don't ever really want to get all out." And I looked at him like I didn't get that, and even though I was right, the market did go lower. I feel like having a couple positions gives you a better understanding. And I'm talking about very, very small. Just so I think you have a better idea of what's really going on when you hold a little bit of stock. Kind of like probe in whoever's book it is. He says, I sent out a probe into the market to see how it would react. Is that in Loeb's book, Gerald Loeb's book? I'm pretty sure it is.
Probe, like that could be Loeb. That sounds kind of like Bill as well.
Yeah, for sure.
Yeah, like I know I've heard Mike Webster mention that a dozen times, like probes. So yeah, like it's common. It's common. I if I didn't know better, I just say that that's yours.
No. Listen, this is kind of valuable. When in a market just like this, when I'm under siege, when I let my hedges out, you have to draw a line in the sand, and I don't mean on paper. Okay, I mean in the market. You need to sell you need to sell some stock, and now you've got a price, and every 0.5% below, you got to sell some more, and sell some more, and that will keep you from panicking. In other words, if it just goes down and it undercuts an area, you want to be a seller. But if it stops going down, you have to say to yourself, it's kind of like, I'll only buy more stock if it's going higher. I'm only selling more if it's going lower. Then I have to be proven right on my first sale. And I also kind of try to keep track of my last 3, 4, 5, 10 buys or sells. Did they work out? In other words, the sales I've made, have prices continued to go down? It's a trend reinforcement. I know I'm wrong.
So now I'm personally curious about this one. How many types of sell rules do you have? Like I categorize mine into 4 different buckets. Like, well, what types of are you are they just like O'Neill sell rules and that's it, or
okay,
I'd love to hear some of your selling.
My worst attribute, because I'm the worst. I don't want to sell. I'm the most optimistic person. Kind of the reason I kind of did pretty well in this rally, in this rollover, is I had climax runs. I sold into all of them. I sold into the top of Nvidia, Tesla, Teladoc, Shopify. So it was easier. Like if the stock doesn't blow off, I'm always going to get caught rolling over. I don't sell. It's either if I don't have a blow off top or it doesn't break the 50.
Okay.
I tend to overstay the party. One of my worst
Interesting.
characteristics is my give back off the top is probably too high. It's too high
All right.
for my liking.
Hmm.
So
Have you ever thought of changing that somehow, or like, well, can you talk a little bit about that?
I'm actually going the other way. I'm trying to elongate my holding period
Interesting. Well, why?
because I don't want to pay the tax. And I know that I need to, if a stock is going to go a normal cycle, the
Okay.
normal true market leader goes about 98 weeks. How
Hmm.
many people hold a stock for 98 weeks?
Yeah, not many.
Well, then they're ruling out making a killing. You've got to be able to sit. Then you also have to ask yourself, can I sit to a pullback all the way to the 50-day? And if you
Hmm.
can't, you're probably too long. So you
Hmm.
kind of, I think trading around a core is really my preferred method. And
Okay.
they say you can't build a church for Christmas Eve. Well, I don't trade. Once you take the max losses out, you
Hmm.
have to trade along the historical parameters where every correction is not the end of the world. And if you're bailing on everything you have just because it rolled over a little bit, you're never going to be in how are you ever going to be there for 98 weeks?
All right. All right. So let's say you're trading around the core position. If you're trading around the core, then you're buying and selling within that 98-week period, probably like within the 52-week period, and then you're not getting the tax benefit, right?
Well, the core,
Like,
like
is that part of it?
I don't want to ever dislodge more than say 30% of my position on the way up. I'll
Okay.
let go 30% of it, or I'll sell deep in the money calls when it's way extremely high. And then when it comes back down and it's corrected, assuming it gets support, I'll add it back in. But
Hmm.
I don't like getting cute with things because I tend to be a horrible short-term trader. I'm terrible at it. So
Okay.
I just tend to hold. And, if you look at first of all, since QE, the corrections have just been so minor. Like prior to QE, the market would roll over, it'd go down 3, 4, 5, 6%. And then you could basically say, I think we're going to have a 10 or 15% correction or more. So it was reasonable to sell a lot.
Hmm.
But post QE, the market just hasn't been allowed to go down, except for this crazy period. Most little rollovers, like the paper will go marketing correction, that's like a bottom signal.
Hmm.
I mean, I love the paper, but that needs a little work.
Yeah, well, it's very interesting how that tends to happen. Um, like I want to get to some questions from the audience too. Like, well, we've got it about 20 or so far, and we didn't even get into the official Q&A period. So let's open it up to the audience and start seeing what's in here, and let's get through some of it.
I'm ready.
Question: why did Jim buy T-Doc in the first place when they have no earnings?
That's an awesome question because I
All
hate
right, so let's bring up the
earnings.
chart. Let's bring up the chart and take it away. T-Doc.
Okay, you know how we talked about staying in the market? I
Yep.
actually bought Teladoc on Christmas Eve 2018. So because I was in it, I was watching it a lot closer. I thought it formed a wonderful cup and handle. It explodes out on earnings last November, late October, November.
Yep.
And then it just acted beautifully. And I really think the fundamentals are exceptional. But it had great revenue growth. Like if you don't have, first of all, it's pretty rare that I'm buying a stock without earnings growth. Earnings do matter. And so, the common response I hear when I say that is, well, they're like, what about Amazon? I'm like, yeah, well, there's one Amazon. Okay. Most of these stocks without earnings are never going to earn money. They're going to go to zero. And so I don't like those odds. If Bill O'Neill was here, he'd go, what are you doing? He's like, there's 50 companies here that all have earnings. Why screw with that? And I think he's right. I think earnings gives you more stability. There's a lot of institutions that are mandated. If a company doesn't have earnings, they can't buy it. I mean, you remove institutional sponsorship. So yeah, in general, I don't like it, but sometimes I'll override even my own favorite, my own rules a little bit. And there's also no great institutions in here, like the top 10 or 15 that I look at, not one of them is in it. But I couldn't ignore the volume and price pattern. I mean, this stock, my buddy Cubby Bears pointed out to me, he's like, Jim, he goes, this stock hasn't gone down but 1 week in the last 20. I mean, that's just rampant, massive accumulation.
So you're looking at that. You're looking at this down here.
Yeah.
For volume. Yeah, just like how many up weeks in a row, and then how it blasted off over here.
And here, I loved the short position. I absolutely loved it, and I thought it was going to blow off, kind of like Tesla. But I called the stock loan department at my prime broker, and he's like, yeah, you can borrow all the shares you want for no vig or for very little. So the squeeze wasn't really on. And I found out the other day, and then we kind of had a real, when Mike Pence came out and said, we're going to pay for all the telemedicine, and the stock exploded up, I thought that if the shorts are caught, they're done, and it reversed and went down. So it was kind of a expectation breaker, and so I had to dump a ton of it. So why did I buy it? I love the pattern. I love the story. The revenue growth was good, and it was just in the short position. Those are all part of the reasons I liked it.
Yeah, very interesting. All right, fair enough. Well, let's see. Well, what other questions do we have? Well, we've got 2 questions from Jim from my friend Kurt, who was a longtime member of the New York City IBD meetup. Question number 1: you get in big to very liquid stocks with great fundamentals, but you have seen things like TDOC, Okta that have no earnings. What do you look for to give conviction? So you already went through TDOC. Let's take a look at Okta.
Okay,
how did you trade this one?
I loved the day of 3/8/19. You can see the huge tail. I think they reported earnings the night before, and the stock was murdered on the open the next day. And then it almost closed up, and it closed above the 50-day moving average. And I remember Apple Computer did the exact same thing when Apple was raging many, like 10 years ago or more. And in after hours, it broke the 50. I got out like a chump, and then it rallied back. Even in after hours, I think it closed above the 50-day. And so it had this long tail on it. And that really made me excited. I was already in it then. So I think I bought this. I must have bought it.
Looking back here.
Back last December.
Last December. So December. So
here,
somewhere in here.
I was buying it around 70.
Oh, somewhere it's around 70. So 70 is like back here.
Yeah. And so, here, you want to know this, now that we're looking at Okta.
Yeah.
Do you see what happened in August, September, October of last year? We had this crazy occurrence where the whole market shifted from aggressive growth to value. And that process it happens all the time, the ebb and flow. But to go from full-on growth stock market to a full-on value market often would take a month. And there it happened in like 5 days. It was an absolute, almost a black swan. I mean, it was crazy how that occurred. And I was late again selling. I was a late seller because I just thought there's no way these things are, but when they all broke the 50 days, I ended up having to, get rid of it all. But we've had a lot of really strange occurrences in the last several years where we've had these unique occurrences that happen much, much faster than historical. Like what's happening in the market right now, it's like a slow motion crash. Like the crash of 87, it happened in a day. I mean, you had the market rolled over, but when it broke wide open, it happened in 1 day. So we've had almost a crash in about 2 weeks. It's just 1,000 points, there's a lot of strange stuff going on right now. But I guess there's always a curveball. There's always something that is unique that screws people up, especially me.
Another question from Kurt's second question is, are you still big into Ethereum?
Yeah, I have a crypto hedge fund. And the answer is yes. I think there's a liquidity crisis going on in the world right now, and they're selling everything. Treasuries were down today. I mean, everything that has a bid is being liquidated. There's a shortage, and Ethereum's suffering from this. Bitcoin, crypto. I mean, there's a deleveraging going on. There's a scramble for cash, and that's why Ether and Bitcoin's getting hammered. It's just we're in a cascading market where over-levered people are just selling anything they can. And that's why we can go lower. Don't forget, in the crash of 87, the put to call hit 2.5. I mean, that's freaking high.
Yeah.
So yeah, I mean, I am in Ethereum. I own it personally, and I have a fund that owns it, and it's being crushed. And we're in a liquidity crisis right now.
A question from Oliver. How did you get into CanSlim investing, and what were your first few years of trading like?
I was a rookie broker, and I didn't know what the hell I was doing. I mean, I absolutely had zero clue whatsoever, and I kept losing money. And then I stumbled on the paper at 7-Eleven, and I read the paper, and then I read the book, and I started to implement the rules. So I did it so I didn't lose my job. I mean, it's kind of tough. I mean, I don't remember what cold calling is, but like I would cold call, these directories and books and things, and you break your butt for 6 months to get a bunch of customers. And then I blew them up in bad biotech stocks and things. I mean, I would buy stocks because there would be an article in Money Magazine, and I just picked the cheapest one and just load up on it. I didn't know what technicals were. I didn't know anything. I didn't know a thing. So I kind of got it. I knew I needed to find a method to make money that worked. And that's why I got into it. Just so I could stay in the game.
So let me ask you this. When did his rules start to become your rules? When I first tried to adapt Bill's rules, to me, I found the book and it's just like, wow, this makes sense. I'm going to follow every single thing to the letter, and read the book a dozen times. I tried to apply it, and I couldn't make it work exactly the way that he was. And it didn't dawn on me until a few years in that I needed to make it my own. So I needed to trade within his framework, but to trade it in the way that worked for me. Did you go through anything like that too? And what was that like?
I coach really, really well. So I just pay attention and follow the master. I'm not trying to reinvent the wheel. Okay. There's, you find somebody who's a billionaire, they're successful. You just follow them. You copy them. There's no reason to reinvent anything. I mean, now I'm going to talk out of both sides of my mouth. The difference between a hero and a crowd is one step forward. You've got to do things differently than other people to make more than them. But so Bill, I love the style, and I saw no reason to figure it out myself. He'd already done it for us. I just copied him, verbatim. And here's the thing. It's real easy to follow somebody when it starts working for you. For me, when it started working for me, I was like, the proof was there. I mean, anybody who cuts all their losses at 7% and just buys breakouts, you're gonna make money. I mean, and that's what I wrote down all my buys for the last year, and I noticed I'm cutting all these losses perfectly, and I just said, eventually I'm gonna stumble into a real winner, and I did. So the answer is it's easy when it works. You said it didn't work for you right away. It could have been the market you were in. Maybe you was in a really bad environment. Dude, I was so rookie-ish. I didn't even understand good and bad environments. I didn't even know what kind of environment we were in. But I knew if I was cutting all my losses, it was going to work.
Yeah, so one of the things that finally got it to be aha, it's trading it in your way was when I went to like the level 3 that Mike and Charles Harris teach. And like and he's and Mike is trading very similar to Bill, very similar to yourself, and Charles is more of the swing trader, and both of them are trading within the framework of Ken Slim. Then it's like, oh, you could do this in different ways. All right.
Yeah, I just really try to. People ask me all the time, "What about this indicator?" I'm like, "Well, Bill didn't use it. I don't need it. If it's not on Wanda, I don't need it." Bill made a fortune with pretty basic things. And there are different ways of interpreting Bill's method and implementing it. I mean, look, there's probably 10 or 15 different viable investment methods. You just have to find one that suits you intrinsically. If it doesn't agree with your personality, your makeup, your beliefs, it's not going to work. I mean, some methods are more volatile, and that's going to rattle a really super conservative person. And you got to find something that agrees with your sentiment, your disposition. And it agreed with me very, very well.
How many did you have to go through before you finally found Bill's?
Well, I didn't know what the hell I was doing. I was a complete rookie. I mean a rookie. Like I kind of did what my dad did. My dad had been in biotech stocks forever and very small, okay? And so I'm like, well, it worked for my dad, I'll buy biotech. And then we get into a wacko biotech blow off, way back in the day. But when that ended, I thought like biotech was going to work forever. And then it went into a nuclear deep freeze, and then I started to learn about sector rotation and how a certain sector will remain hot for 9 months to 2 years. Because then it went to gambling stocks. I mean, when the United States started to have legalized gambling and riverboats all across the country, gambling stocks went to Mars right around the time biotech did back in the pre-1990. But I didn't even know any of that stuff. I mean, I knew nothing. Zero. Z-E-R-O.
Wow.
I mean, anybody can do this. Okay, anybody. I was a dyslexic kid who had horrible grades. I was a very, very hard worker, and I coach really well, and I just dove into this, into Bill's book. And I mean, I've read Bill's book. I could quote most pages to you, like right now, and I haven't read it in a couple years. If I can do this, anyone can do this. But you have to have those emotional characteristics, perseverance, discipline. You've got to be, if you ever meet a guy in a bar, he's like, I'm the greatest, I made a fortune in stock market, he's full of shit. Nobody who's crushed it in the market is arrogant, because the market just beats you down. It repetitively beats you down. You've got to cut your losses. I mean, I think 65% of my initial opening positions are losers. My default is I'm going to be wrong. I mean, you got to be pretty darn humble to say, I'm going to get kicked in the face 6 or 7 times out of 10 and get back up and reload. So I forgot what, I'm such a tangential thinker, man. Whatever, bring it. I'm ready.
Now, question from Mashoud. How many stocks do you have at one time? How many stocks do you hold?
I try to keep it down to 6 or 7. And okay. I used to weight them based on my assessment of their probability or of their possibility for what could happen. And when I was running just my own money back when I was a retail broker, that worked for me. But when I opened the fund and I had this big pool of money, I somehow lost my ability to discern what was going to be great. So I kind of mandated myself that I have to take equal weighted positions straight off, because I can't discern anymore which is going to be a true monster and which is not. I've had way too many occurrences where I have like 5% of my account in the stock that triples, and then if you just are consistently weighting them the same all the time, when you catch that monster, you're going to have enough size to make it meaningful. And that's a crime. It's an absolute crime to pick a monster and not have enough money in it. It's like, what's the point? It's frustrating. Money management is so at the roots of this, the core of getting it right. If you don't have your money management right, you're going to lose. And so doing everything right except for position sizing, you're going to screw yourself when you catch the monster. You've got to have the right amount of money in each one.
Right. Well, like, well, what would have happened if you had like 2 shares of Tesla and you sold it perfectly? Like, fantastic. Like, you did it, but
It doesn't move the needle.
yeah.
Listen, it's my personal opinion, and I'm not a cowboy like I used to be. Okay, when I was running my own money or whatever, when I'm running these funds, I have a responsibility to my partners not to take excessive risk. But when I open a position, I'm building it through the day, but I try to have 10% long in that stock that day I open the position in. And my objective is to get to 18% before I'm up 2% on the whole thing. A lot of times my own buying is driving these stocks, so I have to back off and see what it does and make sure there's somebody bigger than me in there, because I don't want to be the only guy holding this thing up. But 10% is barely enough where if you get a triple, it's going to move the needle in your equity curve. And I like to get it up to 18%. But once you get over 18%, if you have a gap down of 20%, you're going to damage your equity too meaningfully. So, back in the day, I used to go a lot heavier and I used to use a ton of margin, which I use margin, but not anywhere near like I used to. Somehow I got off topic, but position sizing is absolutely critical. Critical.
Yes. Well, 100%. Yeah, I've seen that in my own trading as well. Like, I started using Van Tharp's position sizing, which is a little bit different. Like, you're kind of backing into the position based off what you want to risk.
Yeah, I absolutely build my positions, and I start off and I buy as long as my buys are acting properly. I'll tell you one simple story. One time, this is a million years ago, I just opened my fund, and this is when you call the floor back in the day, and I bought 50,000 shares of some semiconductor stock. And the broker calls me. He's like, "Oh, I got a great price for you." He goes, "I got it a quarter cheaper than you put the order in." I'm like, "What?" I go, "Dump it all." He goes, "What?" He goes, "I just gave you the fill." I go, "Sell every share. Dump all 50,000. 2 days later, they missed earnings and it just blew up. I'm like, who fed me that 50,000 shares? I mean, who's this monster offloading? Somebody knows something. So it's a double-edged sword. Size kills performance. But I can also test the market a little bit. When you're buying a couple hundred shares, it's very difficult to tell what the market's doing buying a couple hundred. So it's a huge cinder block around the Olympic athlete's legs of having to run a large pool of capital. But you can learn that little tiny bit of information that people who are running smaller amounts can't figure out. But in general, the great money managers attract shitloads of money, and then their performance goes bad because you just can't. I'm running between all my funds of just a little over 100 million. I think over $100 million, you lose your edge dramatically. Okay, that's why guys like Druckenmiller are just so unbelievably amazing. That he is a stock speculator. He's not really an algo guy, and he's running a giant fund. It is such an anomaly that he's able to do that. He's probably one of the most gifted traders of our time. No question about it. The fact that size kills performance, flat out. It happened with Magellan, Peter Lynch, all these guys. You get into these giant dollar amounts and you lose your flexibility.
So do you think that the same type of ease of buying, like how does that happen today? Right? Like back then, like you could kind of feel it like, or is it different than it is today? And how might you feel it today?
I think the liquidity is kind of really decreased as we've had all these share buybacks. I mean, the supply of stock is just reduced dramatically. I think the lack of market makers, like I used to be able to call a market maker and say, "Hey, make me a market on, whatever," and he'd block trade you out, whatever you wanted. Now you've got to, if you look at the orders, you see most of these orders are trading 100 shares at a time or less. Block orders just don't really occur anymore. And I think it's hurt the market. I think the volatility's gone up. I think government regulation has screwed the market up. I really do. When you don't have a buyer of last resort, volatility goes up. And when you just with what is it, the Frank Dodd thing, market making firms just kind of dried up, and that increased volatility, and it made guys like me have a more difficult time. But I love these, the book Flash Boys, where when I got in the business, a great stock like Intel would trade with $1 spread. Mm-hmm. St. Jude Medical, they invented the heart valve. This is 20, 30 years ago. It would trade with $1.50 spread. 100,000 shares cost you $150,000 to fill. Now the spread's 2 cents. So what's crushed the floor trader has been a boom for guys for everybody. Everybody who's putting orders in. So is the longest answer to a question ever.
Well, we've got a lot more questions rolling in too. Tim asks, can you explain the 3, 5, and 7% sticky note on your computer?
Yeah, I don't. Okay, when I put it up there, if I had a block of stock and it went down 3%, I'd sell a third. Down 5, a third, and down 7, I'm out of everything. Now I almost never stay. If I'm not out by, if I take a 7% loss, I screwed up. I don't take losses that big anymore. But I will not start selling until it's down 3. You've got to. Do you play golf?
No, I don't.
Okay. When you're putting, if you don't putt the ball to the hole, it cannot go in. It's an impossibility. And I see so many people suffocating their trades. It flinches, it's down a little bit, and they just panic and flip out. Stocks are going to fluctuate, even on a breakout. Okay. If you're not giving your stocks 3% down, at least for me, and I consider myself an intermediate term position trader.
Okay.
I will not sell anything until I don't assume anything. I assume the stock has all the variables, it's going to go up. But if it pulls down 3%, I consider that a normal fluctuation. But at 3, I have to start letting stock go. And I hope to be out of everything by 5. Mm-hmm. And I try to sell in 15% blocks. I used to sell in 10% blocks. And now I need to get out a little quicker. So I kind of refined it to 15% sell each trade out.
Mm. Do you think that you'll refine that again? Because earlier you mentioned that you wanted to hold for a bit longer too.
If I'm at a loss, I'm just out. I don't want to.
I see. All right. So that's for getting out quicker if you're wrong, but you want to hold longer, like when you're right, of course.
357 is only on my initial buy right at the pivot.
Okay.
Okay. Some people will cut them quicker if they're like a day trader. Like a 3% loss for a day trader is like a catastrophe, right?
Right.
For me, that's just. I'll tell you something else. I would rather lose 3-4% on a stock than make 10. I have no interest in 10% gains. Zero. None whatsoever. I'd rather I want to give a stock every possibility to succeed. I want to give it all the leeway I can. You have to have the confidence to sit and to believe you're right. Can I go on a tangent?
Yeah, go for it, man.
You have got to be a free thinker.
Okay. How do you mean?
I was duped. Completely duped. And I'm not trying to make this political at all, but in the 2016 leading up to the election, I was completely duped by the media. In spite of my own free thinking ways, Trump would have a rally and there wasn't enough seats. People were out in the parking lot. And then Hillary, they'd photograph a Hillary thing and she couldn't get 300-400 people in the room. But I was so gullible. I was sucked in by the media. I try to pride myself on being a free thinker. And I couldn't see that. But in hindsight, I look back, I'm like, well, of course he won. People couldn't wait to go see the guy. You've got to be a free thinker and you've got to have the conviction to stay with your position. Otherwise, you're never going to get to the finish line. You're never going to get that monster. Now, being a free thinker doesn't mean being a moron and letting your losses run. Cutting losses is absolutely job one. But once you're ahead, if you think Teladoc is going to have 20% of the whole population using their product, Lululemon, I would go in the stores, it was all female products. And then they came out with a tiny little bit of men's products. I said, I'm holding Lulu until 50% of their sales are male. You got to sit, man. When that thing rolls over, you're like, well, are 40% of their sales male products yet? No. You got to have the courage of your conviction. You've got to have. I think this China thing and coronavirus. You're a free thinker. Like right now, you've got brilliant medical doctors saying this is going to be an apocalypse, and then you've got other really, really equally intelligent people saying this is no big deal. Well, I'm not smart enough to figure that out. So all I have to do is trend follow. But on paper, I look and I go, well, they had zero forewarning, zero. They were blindsided. Then they lied to try to cover it up, so it spread like mad. They have an inept medical system. It's ranked 138 in the world on per capita spending. The population density is just, China's a worst case scenario. Absolutely couldn't be worse.
Yeah, for something like this, sure.
Now, that's my opinion. But what do the indexes say? The largest index in China, the SSE, even after last night's trading, is only down 6.3%. Okay, a ZTO is a transportation logistics company in China. It's at an all-time high. JD made an all-time high yesterday. If the world's coming to an end or China's going to fall off a cliff, how could those stocks possibly be in new high ground? You have got to be a free thinker. This is a completely contrary view, but honestly, if this market straightened out, I would probably be. I have a list of Chinese stocks. I'm all over. I'm dying to buy them.
All right.
Did I take this so far afield? Sorry.
Well, you led it to the question that I'm sure that everybody sitting here is like, can you name a few of those stocks? Are you able to?
Yeah, absolutely. I mean, GSX is pretty illiquid. So I listen, NetEase is but there's one other thing. Coming out of all this, the countries that are going to be smashed are oil producers. The losers, oil producers, dictators, despots, and world scumbags. These guys are going to get. Anyway, China is an importer of oil. They're a beneficiary of this. Esports, I think, is one of the fastest, biggest trends there are. And NetEase is the leading esports company in China. So you've got the double whammy of Chinese and esports. And I've gotten old. I'm 55 now. And I'm kind of out of touch with kids. So I've really become friends. Well, the guy who I run the crypto fund with, he's 20, he's very young. He's not even 30. And this other kid who does all my technology for me, he's like, yeah, Jim, he's like, the reason AMD is going up is their chip is as good or better than NVIDIA's, but it's cheaper. How am I going to know that? I'm not a gamer. You've got to associate with young people. And he is all over. He's like, Jim, I'd rather watch esports than I would a baseball game. He's 23. He's crazy. First of all, you got to follow smart people. You can't follow ding dongs. So NetEase, GSX is pretty illiquid, but I love ZTO is captivating to me. I cannot take my eyes off of it. AMD, I still like Team. I'm still holding a tiny little bit of Team from like, I don't even know how long back. Booz Allen is a consulting firm. I'm less interested in that, but I'm watching it. Those names right there. Listen, whether we crash in the next 3 days or have a massive follow-through day, I'll be there. I'm going to be there. I will buy whatever has the highest relative strength, hopefully coming out of some kind of base. The problem right now is if there's any semblance of a base, it's a stubby little thing, which is going to be prone to failure. So probably I really don't foresee myself doing much. Hence, I bought some stuff in my own personal account. I don't want to conflict with that. So.
All right. Fair enough. Thank you for all that. Let's find some more questions. All right. This one is from Jim. Once we get a follow-through day and we get a green light in the big picture column, can you explain your buying approach based on the cash that you have available? For example, purpose, let's say you have 20 grand to invest. And they've been talking about buying a quarter, a half position, then a full position. I'm not clear on what this actually means.
Okay, he's really got a big advantage over me. Like in my hedge fund, I will probably only go about 30. I'll only add 3-4 stocks. I'm kind of being a hypocrite. I'm going back. When I'm testing,
it's okay.
Listen, there are occasions when rules conflict. And you just have to figure out which is more important. especially in a period like this, because it's so tricky. I mean, the odds of a failed follow-through day are probably fairly high right now. So I don't want to overcommit, but I want to probably get 30% long. But if I had $25,000, you can get out of $25,000 worth of stock. If you buy 4 stocks, 5,000 a piece, you can get out without you hit enter, market order, you're done. So that's a luxury, an amazing luxury. So you could.
When does that luxury go away? At what level?
I think if you're running, you could even run a couple $1 million and not really move stocks around too much. You get over, say, 800 million, couple $1 million. Under that, you just market order and it fills. You know, you could buy 5,000 of almost anything at the market, at the offer. It's not going to move. It's when you start buying more than that. So what I would, back when I had $25,000, I often would be like on margin 20 minutes after a follow-through day. And back then you could go triple long, not just 100%, but as long as you reduce the margin by settlement day, you could carry that. So I would buy everything making a new high. And then I'd kind of sift through and figure out what was really the true leaders, and I'd dump off all the other crap. But I haven't been 200% on margin in decades. Like I just, I had this boss a long, long time ago, and he was super conservative. He had I worked in a bank. I was a broker in a bank. And these guys were so uptight, man. Like, Cameron and Ferris Bueller's Day Off. So,
yeah. I remember that.
Yeah, he's like, well, that's who this guy was. And he's like, look, Jim, he's like, we're going to hire you. After I had like 5 or 6 interviews with these guys, he goes, this is real simple. We're going to introduce you to a lot of really rich people. And he goes, if you don't make money for him, don't worry about it. He goes, and he said this, if you lose money, you're fucking fired. That's it. And so,
wow.
Go on. And then he said this, he goes, we're in the stay rich business here. We're not trying to get rich. These people are rich and you're going to be managing their money. And so you can just, not make money for them or go up small and whatever. But if you lose money, you're gone. They won't tolerate that. And so,
wow.
Basically I'm going back to margin. All these stocks right now that are going to go to, like, if the cruise ships or the airlines go under, it's because of debt. Debt is at the bottom of almost all bankruptcies. Okay. Over leveraging in hedge funds, over leveraging in business, debt is often the root of the problem. So I'm going back to the 25 grand. He can move around real quick. He can go on margin and he can get out. I can't do that. I have to be a lot more judicious and careful.
Yeah, understood. And I love the difference between what most individual investors can do versus like what you're doing if you're running a fund. Like that's such an important differentiation to like understand that mindset. And for me too, thank you for that.
You're very welcome.
So much gold in this. I can't wait to go back and watch the replay too. I'm like scribbling notes. I'm like almost out of ink. I've got a few other pens like lined up. A question from William. What do you think it will take to rotate this market back upward? Oh, we kind of went through it before. Like any other thoughts?
The Fed. You cannot underestimate the power of the Fed. Okay. Now I know the Fed's not going to cure coronavirus, but the Fed's going to inflate this thing. I mean, they are pedal to the metal. This situation that's unfolding is not going to make the Fed conservative. We're going to zero. I was very fortunate to be at a dinner table with some astoundingly wealthy people about 2 weeks ago. And I said to one of them, he said, what do you think? And I said, I think we're going to negative interest rates in the United States. Now, I gave him this time frame of like 18 months. I think we could be there pronto. And I know the Fed is independent, but I think the Fed is being bullied by our president, and that's fine with me. I'm totally cool with that. But it's a guarantee. We are seeing rates are going down on next Tuesday. I'll be in Mexico drinking a Corona.
Be careful with those.
Yeah, dude, there's not enough of them in the country for me, buddy. So what's it going to take? The Fed is going to gun this thing. They are going to get involved in the money markets, the repo markets, Fed funds. They're going to throw the book at this thing. The Fed is all in. Okay, this is a gamble they can't lose. Okay, they can't lose. They're literally all in, and it's hard to understand the power of the Fed. Stan Druckenmiller, first thing, what's the Fed doing? That's what he wants to know. So what's it going to take? The Fed's going to stimulate us out of this thing. And I would really use China as your model. Okay, maybe there's going to be a reacceleration in infections in China. Well, maybe the world's going to change then, but I don't think we are. Listen, American exceptionalism is real. We are the greatest country known to humankind ever in history. We are innovators. We're going to figure this out in a way faster than all the panickers think. Everybody chill. I meditated yesterday at noon in the dead heat of the battle, and I did it again today. I took 15 minutes. I said, I'm no good to anybody. I can't make great decisions if my mind is jammed with crap. You know, America is a great country. We are the greatest country ever. We're going to figure this out. We have the smartest and brightest people in the whole world. They're all here. America's a one-way street. No one's leaving America to go to Zimbabwe or anywhere. They're all coming here, and they're here working on this problem right now for us. We're going to have a follow-through day pronto, buddy.
Because you brought up meditation, like I started meditating a few years back now. I'm meditating like once an hour to like just very briefly, like a 2-minute thing just to reset, release, like whatever I was doing. Like, I'm curious, like, what's your meditation practice like? Like, is it just like today and yesterday, or like, is there like a normal thing that you do?
I use Headspace. I use guided. I'm on for 15 minutes. I try to do it pre-market, but if I don't, you know, I have never ever regretted a workout. I've never regretted meditating, not once. I've regretted a lot of things I've done in my life, but never those two. And I try every single time I get up and down out of my chair, I try to check in. Where am I? What am I doing? I need to be present. And so every time you get up and down out of a chair, I try to, look, I say a lot of things that are a lot harder. I try to do everything I say, but I'm not that disciplined. These right up here, I am wacko disciplined. I have zero defect policy with cutting losses and things like that. My personal life, a little, dude, you can't, no one's perfect.
Yeah, no.
So that's the spice of life. I don't regret it. I think it's made me a better person. It's made me enjoy life more. It's made me more tolerable when I'm fussy around my family. You know, Tim Ferriss's book, Tribe of Mentors.
Yes, fantastic.
Almost every single one of them meditates, and almost every single one of them works out. Well, those guys are all, you know, if it's good enough for them, this is good enough for me.
That's what got me into it. And I read that, and it's just like, all right, like I've got like maybe about 20% in, and it's like everybody's all right. I'll give it a shot, and then like it's been a daily practice since.
Why would you invent anything when somebody else has already done it at the very highest level? Bill O'Neill, Tim Ferriss. There's a brilliant, you want to make whatever you want to do. There's a book, some genius wrote a book and has made copy them. Why? Now, maybe once you get elite in that field and you're now an expert, you might tweak it just a tiny little bit. You might figure one or two little things out to improve it, but don't screw with a great recipe. Just copy people. Why would anybody break their ass to reinvent the wheel? The wheel's already been invented.
Yeah, like all you have to do is learn how to drive the car.
You know, okay, you want a better wheel, put a tread on it, and you can go through the rain. Your snow tires, great. Okay? But like, I'm a simple guy. I am as simple as they come. I'm a copycat. I'm like the Japanese. The Americans invented it, they copied it and knocked it off. I'm a knockoff artist. That's all I am. I am a Bill knockoff artist.
And it's a great thing, and there's nothing wrong with it.
Look, if my net worth gets to be half a Bill's, I'll probably just be able to get by. I'll be just fine.
So you model success, we're not. So like you model success, like, and then like you're kind of like making it like tweaking it just a little bit so that way like it's your own.
Initially, you got to follow just verbatim. I mean, exact. I'm not. You're not smart enough initially. I'm not smart enough now.
Yeah.
Okay? I have a very few number of things which I might do that Bill never talked about. They're so rare, and they're probably maybe even detrimental. I haven't quantified that they are better, and I don't even know what I'm talking about. Like I don't have a rule that comes to my mind at this second. But
okay. Like it's kind of like I think Picasso said that you need to learn the rules first, and then you're able to break the rules.
I think that's really well said. That's fantastic. And listen, to be truly exceptional, you cannot do things the way other people do, or you by nature default will be average. You've got to diverge. That's why I love this China stock thing right now. You mentioned Chinese stocks, that those guys down the hall, they're like, what do you like? I'm looking at Chinese stocks. They look at me like I'm from Mars. I love that. So copy greats, but stay away from the crowd. You got to go against the grain with everything. See the shirt? Those are skulls and crossbones all over it. You got to be great. Counter to the, and I've got my American flag socks on. I couldn't be prouder to be an American today, buddy. American awesome. Exceptionalism coming through, baby.
I love it. I love it. Question from Mike. In downturns like this, do you ever scan the horizon for values on stuff? Stuff like wine, art, cars, things you've had your eye on?
Yeah. You know, I've had a pretty big year, okay? And so I try to mark these big occasions with some type of indulgence. And I kind of found out how very lucky I am, because I have cars. I have the best set of golf clubs money can buy. I have a wine cellar that's so jammed, I'm auctioning some off because I can't drink it all. Or if I do, I'll be divorced for sure. All I want is time to read. It's the one thing that I can't buy. That's, I have, I don't really care about much. I want to play great golf. I don't even care about my cars. They're just a basic utility thing to me. I mean, it fuels my giant ego to have that big logo up on the hood, you know, but I don't want any value. No, I don't. I don't really search values out.
Well, let me ask you this. How quickly do you read? Do you know like what your words per minute are?
No clue. Slow. I'm a slow reader. Well, I read from sun up to sundown. That's all I do is read.
There's a course that I took, a speed reading course recently, and I was a slow reader too, like maybe about 200 words per minute, or like that. That's what I thought was, for me, very slow. When I was done with it, I was like at 800 to 1,000 words per minute.
What's it called? What's the course called?
Jim Quick. You ever hear of that guy, Jim Quick? Last name Kwik.
You're helping me, man. I love this.
Yeah, and so I'm able to like go through books, like the comprehension is there, and what it's teaching you to do is like you could go through, read as quickly as you want, and then when there's a certain piece that jumps out at you, like you have the ability to slow down if you want.
Have you read Life After Google?
No, I haven't.
Okay, I have got to reread a lot of things. When something's really technical or complicated, I have to reread everything to comprehend it. And honestly, if it's really a good book, I need to reread the whole book 6 months later to absorb it. And so reading, dude, I'm dyslexic. Okay, so yeah, reading's not my strong point, but I love it. I do it all day. I'm a geek.
Check out that course, man. You're gonna love it.
I will.
Like there's actually a part in that course where he like has you reading backwards to help you read faster forwards, and it works. You're gonna love this freaking course.
I'm gonna get it.
Awesome, man. Question from Lynn: how do you identify market topping signs, and how do you determine which stocks to take 20% profit from base breakout, or holding on to for longer for those home runs?
The climax runs that we had were a pretty big signal. The problem is when they're occurring and you're in so many of them, you're drunk. You can't see. You're intoxicated. You're having Eve on my shoulder. Like we critique each other's trading every week, and I know she is going to blast me if I derail. So anyway, the climax tops were a major signal, and selling into those. But this isn't my strong suit. This is my worst part of my trading and I don't like to be called a trader. I'm an investor. I used to be a trader.
Okay.
If I don't have climax runs, I'm going to take it over the top. I don't really I so seldom take a 20, 25% gain just to take it. I have to believe that it was a slow stock to begin with, and that it's just a lethargic old, company, and it's not going to double. And I've done that a few times, but in general, like the only time I'm going to get in a position like that is if I see a more mundane stock have a perfect base, and I look at it and I'm like, earnings are only growing at 8-9%, but the base is too good. I've got to get in. So it breaks out and I'll buy it, and then I'll realize it really is a more lethargic name, and I'll dump that. Mm-hmm. But other than that, I'm in these things for 50, 100%. That's my objective. I'm trying to get 4 100% gains per year with an 18% position, which is going to give me an 80%, almost an 80% year after you take out your loser. Like, how many people have a game plan? How many people know how many 100% winners they need and what amount of money they have to have and how long they have to hold them to have a great year? If you don't know that, you're way behind the curve. You've got to understand your matrix to have that type of year you want, assuming the market is capable of giving it to you. You can't force the market. So if you have a good environment, what's your plan? You've got to have a plan. And most people have no plan. And that's why most people lose money.
So my wife was asking me this question before too, because like she's when she goes to pick up our daughter from daycare a lot, like she'll talk to the other moms and some grandparents, and they know that I trade, and so they're like, well what do you think that your husband would do? And so like she's trying to like ask me for like different scenarios a lot, and like one thing that I'm thinking too, like, well, what's their plan? But like, what would your response be like if somebody doesn't have a plan, like they're in their long-term account and they don't have any kind of an exit strategy? Like, well, what would you do now?
I don't jump out of planes without a parachute, man. I mean, you saw Toy Story, right?
Yeah.
If you don't have a moving buddy, get one. If you don't have a plan, get one. I mean, you've got to. I mean, it's stunning to me how people will spend more time analyzing purchasing a $500 washer or dryer, but yet they'll put $2 million in the stock market, and they're like, I don't know, I have no idea what I'm doing. It's insane.
That was how I started. I was not like,
how'd that work?
Yeah, no, it didn't work too good. I thought that you take some money, you put it in, and more magically pops out. That's not the recipe.
Yeah. But that's the way most people are running. Listen, and a lot of people are like, oh, I'm diversified. Diversification is a hedge for ignorance. And this is something that's critical for anybody who's listening out there who maybe has their money with somebody else. Mm-hmm. The number one question you need to ask is, how are you going to save me in a waterfall market like this? And the broker's going to go, oh, we're diversified, Mr. X. Don't worry a thing. Well, they've been nuked. If your broker cannot tell you how he's going to get you out, fire him on the spot. It's the number one question. Protection. If you don't have a plan and you're in the stock market, you're going to get run over. You're going to lose. And how can you gamble with your freaking retirement? This is the most, after your health and your family, this is it. This is the big game here. You don't have a plan when you talk. This is the big game, and you don't have a plan. That's not incongruent. You're making me crazy.
All right, that's good. Like, and for them to ask that question too, like that's a really good question to ask, because then just like, all right, exit, and then like find somebody that's better, somebody that has a plan, somebody that knows what the hell they're doing and can actually help them.
The government screwed the public again. They tried to protect the public and said, if you want to be in a hedge fund, you have to have a net worth of $5 million and you have to have an income of X. So let me get this straight. The hedge funds, which are the best things, are only good for the rich guys, but that little guy can't get in on that. But the only guy who has a chance to protect them, they can't have access to. Government regulation with the intention of helping nearly always hurts the people they're trying to help the most. It's
it's bonkers.
Let's go. More questions.
What trading books are you still reading after all these years? Question from Thomas.
The absolute basics. Reminiscences, number one. How to trade in stocks. Bill's book. Bill's book first. If you're just getting into it, Bill's book first.
How How to Make Money.
Darvish's book is so I think you could read Darvish's book in 2 giant sittings, and you're going to get most of what is in Bill's book. I think Darvish's book gives you a lot of what is in Reminiscences in a very short, and it's a story. It's easy to follow. Yeah. Like anybody can, and I mentor a lot of caddies, and I give them these books. It's much easier for them to start with Darvish's book.
Mm-hmm. It's like a novel.
Survival's phenomenal.
Which one?
Battle for Investment Survival.
Mm-hmm.
I've read every book that Bill has recommended over the years. He recommended John Wooden's book about excellence and process. Being on your mental game, like you need some books about mental. Getting through this horrible market with your war chest of money intact it's almost job number 2. Job number 1 is staying mentally able to capitalize on these epic opportunities that are being formed. If you're blown out, you're mentally distraught. When we have a follow-through day, you're not going to be able to pull the trigger, or you're going to pull half the trigger. A book on your mental game is absolutely critical. And a book on self-sabotage and why people do the dumbest things just as they're about to make a fortune. You've got to understand yourself. This is a game in here. That's where this is won and lost. So you need a great book on that.
100%. Well, I've got 3 books on that. You want to hear them?
Yeah.
All right. So the first one, have you ever heard of this guy, David Goggins?
I don't think so.
He is a retired Navy SEAL and Army Ranger. He was also an ultra marathoner, like doing like 200-mile races. He wrote this book called Can't Hurt Me. It goes through his entire life, like how he was like 300 pounds overweight, and then he was going to apply then to become a Navy SEAL, and he had to drop like 140 pounds just to qualify to take the exams. And like all the childhood abuse from that he went through, like this guy's life is absolutely insane. And he talks about like his mindset of like going through those different stages. And there's so much in that book that I can directly apply to trading. It's unreal. It really is.
I love success stories. I love billionaires who were homeless. J.K. Rowling, John Paul DeJoria, even Kramer was living in his car. I love stories where people turn around from dire straits or bad positions and become excellent in a field and become great. I'm fired up to read that.
Read my book when it comes out. My wife is writing it right now. Part of my story was I was homeless as a 6-year-old.
I know. I saw that. That was what intrigued me. I kind of checked you out a little bit. I love that. I love that you are where you are. That blows me away. When's your book coming out?
Partly thanks to you, man. Seriously, that's what, like, having this show and this forum, I'm thrilled to be talking to like so many of my heroes, man. Like, it's just like a dream come true.
See, I think, first of all, thank you. I'm truly honored. I'm a little uncomfortable with that. I mean, but like the book, the Market Wizards books,
yes,
are an insight into the greatest. I mean, the kind of how you're getting interviews with some really great traders. How did Schwager get these guys? I mean, the icons, they spell it all out in there. The thing is, though, sometimes, like right now, if I start reading you got to read all the Market Wizards.
Yep.
But I get so amped up reading it because I know what's going to happen. This period we're in right here is setting up thunder opportunities. And so when I start reading these books and I see what these guys did, and then I see the market the way it is, and I get so excited, I got to close the book and put it down. I can't read it. I'm so fired up about what's going to occur. What are the other 2 books that you like?
The other 2. All right. So Brendan Burchard's High Performance Habits.
I have that.
Fantastic, isn't it?
I haven't. I need to dive back into that. I have not done enough work with that.
So I've got that one on Audible, and my wife just finished reading the hard copy. I've listened to it on Audible when I go to the gym in the morning, and I've gone through that book half a dozen times. There's so many good nuggets in there, and one of them was that meditating every hour and having this reset where just for 2 minutes you refocus, and then you ask yourself, and the questions that I ask myself are, what does my A game look like for whatever the task that I'm going to do is? So like if I'm continuing with my trading, what's my A game look like for that? If I'm moving on to something else, what's my A game look like for that? And then the next question is, who needs me on my A game?
Why are you doing it?
Is it my family, right? Like, because if I'm not on my A game for my trading, like you're going to get this phone call, I'm moving in with you. Right? All kinds of stuff like that. So you're motivating, like, what does the A game look like? You're getting the motivation for the A game, and you're only going for an hour. So that way you're able to keep the energy level high, because we tend to perform at our best when our energy is up. When our energy is kind of like dragging, that's when, bad habits happen.
Absolutely. Discipline, very hard to maintain consistently.
Yeah. It is. I'm not perfect at it, but like I've got an alert that goes off on my phone like every hour reminding me to do this.
Do you know how far ahead of the average person you are? You have enough time to study, you have situational fluency to know, to check in. Most people are so busy trying to survive, they have no time or money to get the help they need, to spend time investing in themselves. It's almost unfair to have a person like you who's checking in, who's studied how to help themselves become better in the future and have a plan. Most people are just like, I have 3 jobs and 4 kids. Like they don't have a chance to, it's very difficult. They have a chance. Everyone has a chance. Mm-hmm. Everyone who's struggling can become great. But if you're not situationally fluent and you don't even understand the variables, it's harder.
Yeah, I know. Like that's why I feel so blessed to be doing this, and why I'm trying to give more and bring people on, do a lot of stuff for free or for like super low cost. I've got my own room, right? Have you heard of Stock Twits?
Yeah.
Yeah, you know Stock Twits.
I have an account. I just don't go on it very much.
So they came up with this thing where they call rooms, where and they invited me to be a launch partner. They launched it maybe about a year and a half, 2 years ago, and I made my room super dirt cheap, like $20, just because I want people to come in and get real help, and they shouldn't have to, because yeah, man, you had to charge something, right? You couldn't have a room for free. So if
people don't have skin in the game, I used to give Bill's book out to everybody who asked me, and then I'd go to him later. I'd go, did you read the book? No, it's in the trunk of my car. So I said, if you don't have the motivation to get the book yourself, I'm not wasting any time with you. So charging them is good.
Yeah, that's part of it.
You're a huge beneficiary, because when I have all these kids come into my office and I teach, mm-hmm. It keeps me on my A game. And I hear I think through as we discuss, I'll say, read a couple chapters, come see me. And then it's like I'm going through it all over again. It's good for us.
It is.
It's a virtuous thing.
Yeah, man. I remember getting involved in the IBD meetups 10 years ago, and then becoming a leader of that. And it was, that's one of the things that helped me start to learn and reinforce so much. And when you give, you get back tenfold. It's biblical and it's freaking true.
Giving to charity is what blows me out so much more than buying things for myself. Absolutely, I get more out of that than that's fulfilling. That's great. I love making it here and giving some of it away.
It's great. The people that have had the most success, are off. Tend to be the most generous and the most giving and humble, to what you were saying before, about the real traders. It's not the guy that's yeah, I fucking crushed it, man. No, that's in a movie.
It's just not reality. I mean, you can be happy and jovial, but it's the arrogance is the key tip, that they are full of crap. Mm. Great golfers are rare. Dude, golf, marriages, the stock market are constantly beating you down.
Mm,
Anybody who has good in those three variables must be almost by nature a humble person.
mm,
The hubris will cause you to do all kinds of ridiculous things.
mm.
But
Uh, I want to be respectful of your time too, because we've already been going for an hour and a half, unbelievably, and it feels like 10
let's
minutes.
answer a few more questions for whatever people want to talk about.
All right. Let's see. I'm just going in order. From Michael, how did DXCM get onto your radar, and are you still holding that one?
Because I play a lot of golf, and then after I go to the pool, and you see more and more people with these pods. And then I have some friends whose children have them. And I was actually on the stock before that because I screened constantly for earnings. The earnings were phenomenal.
Yeah.
And dude, I love drug stocks, medical device stocks. I think they're just a huge plethora of opportunity. So
yeah, like this was on my radar too.
And
earnings over here,
I want to
sales
say,
over here.
you know, kind of like this problem we're having in the stock market. There was a time with Dexcom when the stock had all these amazing fundamentals, but the market wasn't recognizing, it wasn't paying attention to it. The collapse of 1998, the Taiwanese baht currency crisis, the global currency crisis, that the market's position, the world's currencies were in that position for quite a while, and the market didn't care. But all of a sudden, it did care. There's probably 3 gigantic problems in the world. I mean, epic problems, but the market doesn't care about them at any one moment. You have to understand what the dominant fundamental factor is. And Dexcom had all these great variables, but the stock was terrible. Tesla, same thing. Tesla was in this mammoth base for years, and it was not, you should not have had it, but then it turned up. Dexcom had all these amazing product, everything, but all of a sudden the market started to care. The stock started to get accumulated. It came out, made an all-time new high, and the game changed. So it's kind of like also this. Coronavirus was well known, and the market just kept charging higher. So if you would have said, I'm smarter than the market, I'm selling now, you would have missed the blow off top in a lot of great stocks. You would have left a ton of money on the table. So having great information isn't that big of a deal until the market cares. Like there's the student loan crisis, there's the European debt crisis, there's all these things that could end the world. But if the market doesn't care, it doesn't matter. I would make a fortune before that comes undone. So how did I find Dexcom? Earnings chart, the product, seeing it in real life. Those are my answers.
How many positions, this is a question from another Michael. How many of your positions reach 50 to 100%?
Gain?
Yes.
Of stocks that well, first of all, 6 out of 7 out of 10 of my initial buys, just they don't work at all. I lose money on them. Of the 30% that are remaining that work, you know, I try to get a couple a year. I mean, I just had the review with my auditors, and they're like, you don't trade enough to qualify. Let's skip this. I don't make a lot of trades. How many, 50 and 100%? I hope to have a couple a year. I hope. Some years, none. And some years, like in an insane 2000, you know, the year 2000, the blow off, 300% gainers were common. You have to take what the market will give you. And I don't get them that often. But when I do, I want enough size that it matters. So, you know, a couple a year, and figure I probably engage in 50 initial new purchases a year, probably. So maybe a few more, I'm not sure. But I would almost certainly say I don't engage in 100 new open positions a year, almost surely less. So.
All right. Question from Anonymous. Do you take any short positions in this kind of market?
I know myself well enough to know that in any counter trend rally, I would get stopped out. I have shorted in my life, but very seldom. I know enough about me to know that I can't do that. I don't want to do that. No. Simple answer, no.
All right. In John Boik's book, Monster Stocks, it was rumored that the examples were from actual trades. True?
All trade, all true, all true.
All right. Um, I think you mentioned that. Well, yeah, we spoke a little bit about this earlier. What's your view on negative interest rates in America? Will it be good if this happens?
It's like heroin. The buzz is so phenomenal, but the hangover, the damage when it ends is going to be, I hate using these horrible words, but getting off of the negative interest rate drug is going to be really bad. But here's the thing. I'm convinced of this, but what I do know, I remember 30 years ago, I was driving downtown with this older broker. He's like, Jim, the JGB, the Japanese bond, is a flat out dead short. Well, yeah, he's been wrong for 30 years. Okay. The central banks in the world can keep these balls in the air for, maybe it's all coming undone right as we speak, but it might be 25 years. And the opportunity between today and the eventual disaster, I might be dead and I might be insanely rich. I mean, I'm not going to go, oh, QE is going to destroy the world, but we're in an uptrend. I'm going to ignore it. Don't ever underestimate the power of central banks. They're like absurdly powerful, uber powerful. So it's going to be a train wreck, but it might not occur for who knows? Just follow the trend. You don't even have to know.
Yeah. And you know what? I think that's part of the best advice too. Like, I hardly ever look at the news at all, and yet, like, I was able to get out of 90% of my longs on February 24th, just before we tested the 50.
Dude, I've sidestepped almost, 1990 when Saddam rolled into Kuwait, 1998, I've sidestepped almost every, I want to say every major downturn. There's no reason for you to be stuck in these massive down moves. If you're watching just this basic, if you just hold stock when the market's above the 50-day and you sell when it's below, like, this is really basic. But you have to have the conviction and you got to do it. You've got to pull the trigger. If you're following listen, if the world's going to come to an end, gold's going to go up, bonds are going to go up. You're going to see it in the currency markets. And that's another reason why I don't think there's a major problem in China. The yuan went up to about 7 or more to the dollar, and then it came right back down. And now here's another thing we could talk about. It is a remote possibility that the Chinese central bank is just gunning their own equity markets. That's possible. And that's why these are so close to the all-time highs, but they can't control their currency. They can devalue their currency, but they cannot inflate it. I'm sorry, they cannot make it go up. And the yuan is not going up. It's not, the yuan is fairly stable here. So if there was a real problem in China, the yuan would be over 7 to the dollar. And maybe we will go there, and I will have to acknowledge it's turning into a train wreck, but right now it's not. At this minute it is not, and I'm not telling it where it's going. I'm watching it.
That's amazing. I want to be respectful of your time, so
Dude, I'm just chilling. I'm good.
All right, more questions? They keep on rolling in.
Dude, I am amped. This is the greatest environment ever. I'm ready.
Awesome, man. 9 o'clock, here we come. Let's see. Do you have any rules on taking partial profits, or do you go all in or out? Thank you. Well, you mentioned that before. Some people are coming in late too. So, yeah, a little bit of your selling strategy.
I don't sell until there's a problem. And I don't sell a whole position all at once, unless it's some kind of absurd If it breaks the 50-day on like whale volume, I might let rip with a ton of stock. But even if I did that, I'd sell a block. And if it goes lower, I'll sell more. You know, when I was running a lot less money, I was more able to make greater moves faster. But I'm more of a dimmer switch. I'm not an on and off switch. I'm a dimmer switch. I take a position, I build it, I keep building it if it works. And when I'm selling, I draw my line in the sand. I'll sell a block of stock. If it goes lower, I'll sell some more. No, I'm an absolute dimmer switch. I just about never go one way harshly. But I will say that I'm very impulsive to buy and I'm very slow to sell. I want to give these things, I think once people get out of the rookie mistakes, kind of a later mistake is suffocating your positions and pulling the ripcord for just, I've seen more people sell stocks on a down day when the volume's just average. It's insane. And the stock just goes right back up. And why would you sell a stock going down on low volume? Especially in relation to where it's been. You know, you have to be an optimist if you're going to be long. Buy quickly, buy size. When you're getting out, get out in pieces, slower. Unless you're in a loss. If you're at a loss, you just let it rip. Like you don't fool around with that.
That's super interesting. Like I do that, but on a quicker basis. Like both in my the day trading account and my intermediate term account. Like it's the same. Like exiting a little bit, like into strength, exiting a little bit, like on a trailing stop, like a moving average, and then like exiting like backstops where like you have a little bit of a consolidation if it falls below that, and then like the stop losses.
You've got your lines in the sand. They're just shorter than mine. You got to adhere to them. But I'll make you a bet.
Yeah.
You're 25, right?
Thank you, man. I appreciate that. I just turned 40.
Did you really?
Yeah.
Oh, dude, wait, skip up. I'll bet that you will not be a short-term trader. Your time frame will grow. I will suggest that 98% of all investors or traders, as they get older, stretch their time frame. They just do.
Yeah, it's
and
true.
I bet you will too.
Like I have as my life has evolved. So like, well, when I still had my day job, I was doing a lot more intermediate term, like Darvis that we mentioned earlier. He was one of my trading heroes too. Like he was doing what I was doing, but back in the 50s. And it's like, all right, so you're charting by hand, you're getting telegrams with prices, and transaction fees were 100 to get in, 100 to get out. And I'm able to trade off of this, right? Like, if he could do it, I could do it. So
Darvis had such an advantage. He was unemotional. He put a stop in and walked away. He didn't second guess anything. There was no emotional battle for him. That is, it's a huge advantage. It's a gigantic advantage to be trading 100 lots or 1,000 lots because you can put a literal stop in and walk away. But when you say, oh, if it's down 3%, I have to sell. And then you're like, you know, if you're out pouring concrete on a job, and your stop hits, you come back after lunch and look and go, oh, I'm out. It's no mental battle.
Yeah.
It's a huge advantage.
So late for most of last year and for the first couple of months, so for January and February, I was actively day trading and I was able to focus just for like a couple of hours, in the morning, and then I would move on to like whatever else I would do. But now, I'm trying to build other things, write this book, do other kinds of conferences, and so that's taken a back seat, and I'm doing more of the intermediate term stuff. And it's like your trading needs to adapt to your lifestyle, and when they're out of sync, that's when shit tends to hit the fan.
Absolutely.
Yeah, well, I learned that the hard way when my daughter was born almost 5 years ago.
Knowing your mental state, when my dad passed away, I thought I could continue to run my fund and it would be just fine. And I had Celgene and I had 3 other really great stocks. And I got negative and they flinched and I got rid of them. I was just a pessimist at that moment in time. And they proceeded to go make great moves. And if I wasn't in that frame of mind, I would have never have sold those stocks. I just got negative at that time and I wasn't situationally fluent. I wasn't aware of what was going on in my head.
Do you have a game plan now for should something really knock me off my game now? How would you handle that? What would you do differently?
I'd have to assess myself and say, you know, what am I going through and how bad is it? Do I need to take a break here? You know, I'm so happy that I'm an optimist, especially right now. Like we're setting up, I'm checking in with myself. I could not be more bullish. I mean, not today, but the money that's going to be made, my disposition is so perfectly set up for it when that opportunity shows up.
Absolutely.
I'm ready. Have you seen the Laird Hamilton video when he's talking to Charlie Rose about surfing? And he says,
No.
I work out, I take care of my body, I travel with the tides around the world. I am where the big surf is when it occurs. And Charlie, the applicability to stock trading is such a parallel. Charlie Rose says, well, how often do you have big surf? He's like, well, you know, maybe 1 or 2 days a year. And he goes, really, really big surf? Maybe once every 5 years. But you have got to be at that. You got to be in Fiji when the tides are coming in, when the weather's perfect, and you got to have a house by the beach, and you got to be ripped. You got to take care. You got to line everything up. So when that opportunity materializes, you're ready. And right now is when we all need to be really focusing on what is relatively strong and just remaining positive, you know, keeping your cash in check, get that war chest full, and, you know, up here, don't get damaged, don't get nicked to death trying to buy these bottoms. You're just going to get slaughtered. And then when the real bottom comes, you're not going to be able to pull the trigger.
Yeah, because it's less to do with your physical capital. It's the mental capital that's depleted. That you, not,
and it's
like,
almost
no, I'm done.
Than the cash. It probably is more important than the cash. You have to be mentally on your game.
100%.
What do we got next?
Do you have any sector limitations when picking stocks?
No, I try not to. I've not made a lot of money. Remember NetBank a long time ago?
NetBank, no.
Well, I was a broker in a bank, and I thought the banking business was just like so slow, and I'm a broker, and I didn't really like the business of brokerage, and so NetBanks makes a perfect cup and handle, and because of my bias, I didn't take the full position, and the thing went to Mars. Like I should have made a lot of money. I try not to be biased, but I am cognizant of certain industries are just slow, and I don't really want to be involved with those. Gold stocks are just notoriously fake outs. Okay, and you can't get the imagination running where internet stocks could go to Mars. You say, well, what's the value? Well, it's price per eyeball. It's price per click. Well, gold is there's an ounce of gold and it's tied directly to the commodity. It can't get disengaged. You can't have imagination with where's gold going. Okay, there's so much coming out of the ground and there's so much in use. It's tethered to reality. Teledoc, I can have vision. I can say they're going to take over. You know, this thing could go to $1,000 a share. What if they get 30% of the population? I like that. I don't want something that's tethered to a fixed. The answer is I try not to be biased against any one area. I just love the new high list. I mean, you have to look at the new high list every day, because when you see Clorox and food and grain stocks jammed up in the new high list, you know it's probably a really bad time to be in the market. So you're looking for great names and you want to buy whatever's making a new high, but I try not to be biased, but I am.
All right, fair enough. Let me see. Jim, can you review how you hold or how you handle stocks during earnings? What are the rules that you have to hold, reduce, or sell before earnings?
Okay. Once again, I'm an intermediate term position trader. I think earnings are the greatest opportunity there is. If I want to hold through all earnings, assuming I'm up and I can withstand a 15 or 20% hammering in the position, if you're not in a stock, listen, if you're going to be in a stock for 98 weeks, you're automatically going to be in for 7 earnings reports. 7 or 8. You can't have a triple if you're not going to sit through multiple reports.
Mm-hmm.
Most of a stock's gains because of Reg FD now occur on earnings. Yeah, I sit. And I also am very cognizant of the way the market has been receiving earnings reports. If earnings have been coming out and the stocks have been blowing up no matter what, whether they're good or bad, I won't sit. My buddy Matt keeps a running list of all the reports and the reactions. So I know when the environment is good. So that's the answer. If the environment is good to earnings, it's being receptive and they're bidding them up and they're holding them, I'm going to hold them and stay long. And also, if you're in a really, really bad market, and then all of a sudden, I remember Amazon did it once. We were in this really bad market. Amazon reports and it gaps up massively, and then it held. I'm like, that's a signal now I need to be going long in the market. But gapping up on earnings is just a major. It's one of my absolute rules. Gap up on earnings on massive volume. You can see it up there. You've got to get long. That's a huge signal. I would say as much as a third or 40% of my monster winners were on. I initiated on earnings.
So on earnings on the gap up.
Yeah, it's a huge signal.
So on the gap up day, or do you wait until the next day to enter?
No, I'll get right in on it immediately.
And then, well, what do you use as your stop? Just like the 7%, like wherever that happens to land, or?
Well, I want to quantify. I'll build the position all day long. I'll buy some, because when you're buying a gap up, you might be buying up 15, 20%. So I'll take a position. If it holds, I'll add. I might add 5 times in a day. And if it closes at the dead high, now I feel good. But if it,
what happens if it? What happens if it reverses and it closes near the low?
I have seen some work that have done that, but the odds go against you. I would be seller of some. Almost for sure, I'm going to sell some. If it closes at the dead low, I'm going to not like that. I'm going to be vomiting up the stock, taking my loss, putting my tail between my legs and going home.
Fair enough. I like that. That's something that I need to research more and add to my repertoire. Like normally I'll wait until the day after to buy the gap up. And if it moves, my entry would be the high of the day, the high of the gap up day, and my stop loss would be the low of the gap up day.
I will absolutely, one of the greatest things for me is, say we have a massive gap up and then it holds and I build a good position and then it will just go dead. Like I think Taser did this and SanDisk did it. It just goes dead tight and volume evaporates for 3, 4, 5, 6 days and then it makes a new high. I will throw the book at it. Now I know I've got a monster on the line. I have a high probability of having a monster on the line, but it's really rare that you don't see that very often. But when you see it, you have to capitalize on that. And that's a signal for the general market. When stocks gap up and hold, that's telling you something, especially when it's a bigger stock.
So you're throwing the book at it. How much risk are you putting on, like on a percentage basis, right? Like, so like, let's say like we're thinking of like, normally I risk 1% of my trading capital per trade, let's say, right? And like, are you going up to 2%, 5%?
I'll never really admit, I might build a position. A really, really big position for me now is over 20% of equity to start. And I just don't really do that very much. But I'll buy the 10% immediately.
Okay.
If it goes tight and comes out, I'll go in there and buy another 8%. Throw the book in. Dude, I used to trade a lot bigger in my own personal account a long time ago. I don't really do that anymore.
So if you're buying that 10% and you get a loss on it, how much of the capital is gone? Is that 1%?
I'm out everything at 5%, so 0.5% of equity.
So 0.5%. So as you're scaling in, you would lose like 1% of capital max.
I don't want to lose a 1%.
Yeah. All right.
I might, but it's
It's
because it just it imploded on me. But I want to be risking a half of 1% of capital. Dude, if you're drawing down 2% of equity, the trade's probably bad, or you're
like
way too big.
So like, because a lot of people will hear that, like, yeah, like I'll leverage in, and they're thinking like, all right, I'm gonna like max out my credit cards and like go all in on this thing, and then like it goes the wrong way, and then they lost out like 20% of their life savings, and they're like, well, I guess this strategy doesn't work.
You don't have to take earth shaker positions to get rich. You need to take a good position that won't destroy you if it doesn't work, but you need to have enough that if it does double or triple, you're going to make a lot of money.
Yeah.
It's time. If you have over time, and I mean a long time, 10, 20, 30 years, you only need a couple true, you need every 2 or 3 years, you have to tie into a monster, and you don't have to risk your life to do it. It's honestly, I think it's not prudent, George Bush, to be leveraging up like that in one stock. I think it's not get rich quick. It's just not. You need to, when you're younger and you have smaller amounts of money, you can lever up a bit, but there's honestly no need to. You can still make bundles of money with 20% positions. That's all you need. I'm not a cowboy anymore. I'm just not.
It's such a great way to think about it. Next question. How do you identify your trading weaknesses and steps to improve?
I've got Eve right up here on my shoulder. She critiques. It's a big advantage to have kind of a team. I think Ray Dalio's got it right. Brutal honesty.
Okay.
Be polite, but you need to have somebody. I'm responsible to my shareholders, and I know they're going to watch their results. But I've got Eve every Sunday sending me a evaluation of my week's trading.
Mm-hmm.
My weaknesses are I'm too optimistic. I don't sell when they're rolling over sometimes. I overstay. And how do I correct that? I just being cognizant of it. And I think knowing that I'm going to get a little report from Eve on Sunday is going to kind of keep me in check. That's my safety valve. And we only really instated that not long ago. I mean, this year.
Interesting. Well, what was it like in years past?
I took too many over the top. That's what it was like. I mean,
wow, that's great.
My best stocks have all been blow off tops, almost all of them. Otherwise, I will give a little too much back.
Yeah. So for some of the newer people in here, just to give context, how many years have you been trading?
I was downloading options from Sears in 1986.
86. So like over 30 years of trading, and you're still learning, still improving, still like improving.
I think I got way better in just the last year. Like I had some bad year. Now, I wasn't really down or anything, but like I didn't have monster up years. I was out of sorts, and I thought back in like 2013, I thought the European debt crisis was going to blow the world up, and I was too pessimistic. But I kind of, between better money management, understanding my foibles, having someone there to monitor my trading, has brought me into my A game lately. I mean, I'm having a pretty good year. I'm very happy. I mean, the market's down 20% and I'm up 30. I'm pretty happy.
Yeah, that's reason to be happy.
And I'm in cash, waiting. Here's another thing. My monster years when I'm up 100 or more, I'll have a big run early in the year. I'll get out. We'll have a correction. And now I'm loaded for bear. When that market turns up again, I've got a big fat cushion. I'm mentally stable. And all of a sudden, off it goes again. And now I'm in a position to really have a big year.
Oh, man.
And that's where I think we are right now.
Say that again?
I think we're there now. Like anybody who's got a great cushion right now, after this market settles out, the back end, think about what's going to happen when the Chinese restock the empty supply chain around the world. They're going to run those factories in China 24/7. They're going to pull every person out of the rice fields and jam them in these factories. They're going to run at 120% of capacity until the pipeline is jammed. You can understand, these guys are real communists, for real. They don't care about people. They just want to stay in power. They've got to keep those people employed. They're going to run these things. The back end loaded. The pipeline in the world, the supply chain was fairly empty for a lot of reasons. Companies were thinning out and leaning out. And then we have this, and then there's zero production out of China. Wait till they ramp those factories up again.
Mm. Wow, man, you're giving us so much to be excited about. I love it.
If you're not excited now, you should never be excited.
All right, here's a question. Do you work at being positive? It's certainly awe-inspiring.
It's just me. It's just the way I am.
Mm.
And here's the funniest thing. Like my trainer, I met him about 6-7 years ago. And I said to him, I go, dude, I wish you would have met me when I was really happy. He's like, I think you're one of the happier people I know now. And like only in the last 6 months have I really come back to where I was 10 years ago or more. Like I do feel I'm more on my A game now.
What changed? Like there's Eve. What else?
I had not used margin in years.
Okay.
I think I saw better opportunities. I was just thinking clearer. I mean, and it's virtuous. When you make money, you feel more confident. You do better. You just do better. Meditating. I started meditating 3 or 4 years ago in Mexico when I was on a trip in Mexico. And I kind of went from 2-3 times a week to every day. I think that helped a lot. And when your family's doing well, when your kids are doing better, when you're getting along with the people who are important to you, you are unencumbered to be able to execute better. You got to have everything's got to be good. You can't. I try to compartmentalize sometimes the bad parts of my life in one container, and I try to keep them out of things, and I keep the others good. All those variables has culminated in better trading and better results.
Interesting. How do you compartmentalize?
I break it up into friends, health, family, the market. I've had a lot of ups and downs, a lot of big ups and downs. And I think people who wear black for the balance of their life when their spouse dies is ridiculous. Everyone's life is going to have really, really detrimental, negative, bad things happen. You have to charge through. You've got to put that in a box and say, my child died. I'm going to mourn that, and that sucks. But I am moving ahead. There's 6 more of the 6 compartments. There's 5 others that are good or great, and I am going to go through with those. I will grieve. I will deal with this. And I have not had a child pass away, but I've had some other really bad things happen. Mm-hmm. You put that in that box and you deal with that for a period of time, maybe for an hour or whatever, or a week or a month, but you got to move on. Mm. I compartmentalize them. I cannot let one horrible part of my life wreck everything. I'm responsible for other people, other people's money, other people in my family. I have to be in my A game all the time, as much as possible. I can't let one disaster wreck me for these people. I'm responsible for them.
And how often are you refocusing on your A game? Well, is that part of the morning routine too?
Well, I try to have swallow the frog first. The thing I don't want to do, I want to chomp that down immediately. I need to know what my 2 or 3 major objectives for the day are. I mean, I wake up, I've determined what time I'm working out. I meditate. I pick out my number 1 or 2 or 3 major objectives for the day. I try to push off all those other tasks I hate. I delegate those out. So I know what I'm doing during the day. Ask me that question again. What was the question?
About your morning routine.
Yeah, I try to practice gratitude. I want to think about, I'm so blessed to have these amazing 1,500 count thread sheets. The crazy hot water I have in my hot water. I mean, think about, there's 6 or 7 billion people in the world. Mm-hmm. I live in America. I'm healthy. I have the greatest job in the world. if you threw my ping pong ball back in a barrel of 6 billion balls, the odds of me pulling this lottery ticket out again are like zero. Anybody probably listening to this is so freaking lucky. It's unbelievable. We won the lottery. I mean, massively. Every day you got to go. I could be in Zimbabwe with no health care and a dirt floor. I don't have that. I live in this really nice house with kick-ass carpet.
And like, even for like anybody that's living it in like a poor situation too, like, well, what are the odds of being a human? Right? Like they did the math, like it's like something like in the trillions to
you
one.
A dandelion.
Yeah, well, like you could have like been a tree.
You know,
I mean, like who the hell knows? Like, but we're here.
We were
gone like that.
I know. We were in the Caribbean, and the limo driver's taking us back to the airport, and he's like, "Sir, there's a huge traffic jam. We're going to take this side route." And he took us through like a shanty town, like corrugated steel houses. And I looked, and I'm like, "There's 50,000 people living out here." And I said to myself, "There's happy people out there. There are very, very happy people living in these little lean-tos. Some of them didn't even have electricity or water. Those people, there's happiness out there. It's in your situation. You've got to be grateful for what you have."
Yeah.
I practice gratitude in the morning.
Mm.
I think this too. I climbed a mountain a couple of years ago. I climbed Mount Rainier with a bunch of buddies, and I completely unplugged from everything digital. This infosphere, all this data flying in my face, it cleaned me out. It allowed me to focus better. I think getting away and unplugging after that mountain climb, and then the following year we rode from Telluride to Moab, Utah, 5 days in the mountains. No communication, no trades, no digital feed, no news. You've got to unplug and clear out your mind. Meditation makes me realize that in my head, you have a laptop and you have 15 little tabs across the top. Well, those 15 ideas rolling around in my head all the time. And when I meditate, I close it down to 1 or 2 windows. There's the longest answer in the world to your question.
I think that's one of the greatest analogies I've ever heard for meditation.
I mean, if it's good for the 200 most successful people in the world, it's good enough for this guy.
Yeah, man. So how often do you get away and unplug? What?
Well, I try to get my buddies to do it. Like for my buddy's 50th birthday, we climbed Mount Rainier. The next year we did Moab to Telluride. I really want to get these guys to do it again, but all of a sudden everyone's like, well, my knee's bad. I can't do this, but it keeps you in phenomenal shape. Training for a grueling 200-mile bike ride through the mountains. How often do I do it? I would like to do one a year. I'm trying to get everybody to bike around Greece this year. But I don't, with this virus, I don't know if that's going to happen. And I don't even know if I could get everyone to do it. But I would think about riding your bike around the whole island and hammering out amazing meals every night and then biking 30, 40, 50 miles every day.
To me, that sounds great.
And there's no digital feed in your face. And start to think more clearly. That's the answer.
Yeah, that's awesome. That's awesome. It's after 6 o'clock, brother. Like
you gotta go.
Yeah, well, like my wife is gonna like knock on the door soon, I think.
Dude, that's the most important thing. Go see her.
Absolutely, Jim. I want to say thank you so much. You've given us so much. Like the value here is immeasurable. Like it really is.
Thank you for having me. It was a pleasure. I really enjoyed it. And I want everyone to understand, American exceptionalism is real. It's real. We're going to get through this and we're going to make a freaking killing. First class to private jet all the time. That's the next stop for all of you guys. Have a great night. We're done?
Yep. Oh no, I haven't closed it out yet. Yeah. Everybody's still here. Everybody's saying goodbye. Good luck. Thank you so much. Our pleasure, man.
Let's meet up in a year and talk about how much money we made.
Absolutely.
Okay, buddy.
Thanks so much, Jim.
Take care. Bye.
Take care. Bye-bye.